But RITES is the other one that we're talking about. It reported a muted set of Q4 numbers. Revenues and EBITDA came under pressure, while margins contracted on a year-on-year basis. To discuss this and more, we have Rahul Mithal, the Chairman and Managing Director of RITES, joining us now. Rahul, hi, good morning, and thank you for joining us. You know, it's been a very muted Q4 as well as FY24 for you. Can you tell us what is the reason for this persistent decline that you've seen in the top line, and what is the way forward for the business?
Good morning. So let's dive into the numbers and see where the year started and where we have ended. You see, the year started with two huge challenges for us. One was an export order book of below 100 crores with no fresh export orders, export of rolling stock orders for more than 4 years, the COVID and post-COVID period. And a big shift in the quality assurance business, where 2/3 of that was from the Indian Railways, and which after about 4 decades plus was opened up to 4 players through a competitive mode. So we didn't want to get bogged down by this major challenges at the beginning of the year. We had a clear strategy to minimize the impact of these two streams of revenue. Both are high margin revenues. In fact, export is a high top line contributor to my stream of revenue. So three key aims which we had at the beginning of the year. First, to get an export order. And we've got 2 major export orders from Mozambique and Bangladesh after a gap of 4 years, as I said, totaling to about 1,200 crores in the last few months. 2, to diversify into more non-IR clients in the quality assurance business. And by the end of the year, from about 2/3 IR and 1/3 non-IR, the balance has shifted to 50% shift into non-IR, a large number of new clients. And third, to build up on our project consultancy business, which is our core strength. So that saw a 10% jump year on year. We had our highest ever project consultancy revenue. So all these 3 key focused strategies which we had at the beginning of the FY, as the year progressed, they started gaining ground. And we are confident that this has been the right direction that we are moving on.
So can you give us some numbers in the international consultancy segment, which was muted for reasons as you explained? What kind of growth can you hope to resume in FY25?
Yes, as you see, the year started with export order book of below 100 crores. Now we have 1,200 crores, 900 from Bangladesh, 300 from Mozambique. And these will start generating revenue by the third quarter. And so this year, we will build up on these 2 orders. And the way we are bidding aggressively across geographies in the export business, I'm sure that we would get some orders in the coming months also.
Got that. Mr. Mittal, good morning. Prashant here. Could you outline a fresh guidance for FY25 now? I mean, what should we expect? Top line, EBITDA?
You see, the year 23-24 was a year of consolidation, as I said, to hang on there and minimize the impact of these 2 huge challenges which are outlined. And now with these orders coming in, as also, are having maintained that trend of 1 order a day company, which we achieved in Q3. We managed to continue that in Q4. In Q4, we got 100 plus orders, totaling to 940 crores. So now we have a good enough steady base. And with now we will build up on our 22-23 benchmark, build up on that rather than 23-24. So we see a good, healthy growth on the EBITDA and bottom line, aiming for a appreciable growth on the 22-23 figures.
But what kind, if you can be specific, sir, what kind of growth? If you can put numbers to it.
Yes, what we would like to aim is that we, as we say, we are a consultancy company and we are a bottom line driven company. So we would aim for a healthy double-digit growth on our EBITDA and bottom line figures vis-a-vis the 22-23 benchmark rather than the 23-24 figures.
Okay, got that. Could you tell us what is the order pipeline now? Give us a sense on that, and how many orders are you L1 in? It'll give us a sense of the visibility.
So the year ended with an order book of 5,700 crores. And we haven't added the 900 crores the Bangladesh order, which came post 31st March. So the Q1, we've got already these orders at the rate at which we are progressing. Q4, we were one order plus one order a day. And the rate at which which Q1 is progressing is again in that trend. So I think we will be able to build up on this order book of 5,700 crores quarter and quarter.
Okay, so when you say build up on the order book, right, what's your aspiration? Where do you think you can end FY25 in terms of order wins?
You see, I would say that this trend of one order a day, which has been achieved in Q3, Q4, would continue. So one order a day it depends on the mix of the orders. Q4 was 100 plus orders totaling to 940 crores, which depends on the mix of the consultancy order as the export order. So I think we would maintain this one order a day with a healthy blend of both consultancy and export.
Okay. And is there any impact of the RBI draft norms on project financing? Is there any impact of that on your cost of borrowings? Do you expect that to rise?
No, we are a debt-free company, so that is not impacting us in any way. So we are a debt-free company. We are a low capex company. Our business model is that we are a consultancy company, and that's why, as you see, our return to shareholders have been high. 95% plus has been our dividend payout ratio for the last FY.
All right. We'll leave it there. So thank you very much for joining us, and it's a pleasure having you here on the program as always. That's the management of RITES.